The Honest Money podcast is powered by 10x Investments, a licensed financial services provider. Consult with your financial advisor and let's 10x your future together.
Hi Warren and Honest Money community, Adrian here. I have a question on linked investment service providers or LISP. The question is, what LISP platforms are out there that provide a broad range of investments? So currently I have a small portion invested in a Easy Equities RA account, and our company have a group RA scheme with Allan Gray. So I have access to the Allan Gray platform, but find the range of Unitrust to be limiting in the sense that it's more or less the same underlying investments. So, are there any LISP platforms available for retail investors to have a broader range of investments to choose from? For example, ETFs, bonds, hedge funds, and single stocks, obviously within the limitation of Reg 28. And just some background, I'm a young professional that enjoy investing and researching various investments, and would like the flexibility to structure my own RA account. Thanks.
Thank you for your question, Adrian. It's actually a very good question. So I think I want to just give a bit of background to what, kind of where you're coming from, so that everyone else can understand, and then give you my thoughts. So when we talk about a linked investment service provider, a LISP, that's not a speech impediment. That's a kind of a product, and what it is a place that's kind of a wholesaler for unitrusts and other investments. So you go to one company and you're able to buy a bunch of different unitrusts or index trackers from a range of other investment managers, but you can get it all at one place, all at one wholesaler. So the benefit of that, of course, is that you don't end up with 5 accounts at 5 different companies. You've got one account at one company, and then you're able to choose a range of funds to suit your requirements, your objectives. So the downside of this, of course, is that this isn't a charity. A LISP is not a charity. It's a business, and they're going to charge you an administration fee for using their kind of wholesaler. And I would say that the first thing to note about these LISPs is that they are mostly advisor driven. In other words, they're not really, they weren't designed in the beginning to deal with direct investors. They were really there to deal with financial planners who were looking to kind of streamline their businesses and make reporting for clients easier, and managing the underlying investments on a more consolidated basis. So there aren't a lot of LISPs out there that are very efficient at dealing with direct clients. So I mean, the important point here is that this is honest money, and it's not really our purpose to kind of trash financial services companies or to promote them. Our job is to kind of educate you and help you make smart decisions. So it's very rare that I'm going to give you kind of a list of names of good companies that you can use, or equally a list of bad companies that you should avoid. What I'd rather do is give you the principles, and you can do your homework and hopefully find what works for you. So I think just to start, my experience is that the investment companies, these are fund managers, companies that started, maybe as a unitrust company rather than an insurance company. The investment companies tend to offer more modern, kind of more up-to-date platforms, and some of them are able and are actually good at dealing with direct investors, that you don't have to go through an advisor. My experience of the insurance kind of companies is that they started to offer unitrusts almost grudgingly, and then they started to offer the LISP also almost grudgingly, and so they've tended to focus on advisors, and whether they're independent advisors or agents of the insurance company, that they've focused on advisor business more so than direct business. So as a retail investor trying to pick up the phone and deal with them directly, or get through to someone on an email, and actually get help when you need it, my experience is that's much harder from an insurance company than it is from an investment company. So just be careful that you don't get stuck in a rabbit hole where you've now dealing with a insurance company LISP, and you're hoping that everything will go fine, and when the wheels fall off, because mistakes happen, you can't get any help. So maybe focus more on the investment companies when you're looking for a LISP, and not so much on the Unitrust, on the insurance companies. Having said that, the Unitrust companies, I know you mentioned Allan Gray as an example. They have a LISP, and they've got quite a big range of Unitrusts on their LISP. So it's not just Allan Gray funds or their offshore kind of sister company called Orbis. They've got funds from a bunch of different fund managers on there, and included in those funds are index trackers. So as a direct investor, you've got a significant range of funds that you can choose from, but you won't be able to go and buy individual shares, for example, or you won't be able to go and buy a listed exchange-traded fund. The reason for that is that the Allan Gray LISP was built as a Unitrust platform. It wasn't built to accommodate every kind of investment out there. And I think that's the important distinction here, is you are, when you're dealing with a LISP, there are some LISPs that have kind of bolted on a stockbroking solution as well. But my experience of those is that they don't tend to be cheap, and their admin tends to be not good. I can't use bad language, so I'm just going to say not good. And so I think that, Adrian, I'm guessing you're kind of reading between the lines now. I'm nudging you to say, if you want a range of different unit trusts, including unit trusts that track an index, then you will find a list that will work for you. But if you want to be able to buy individual shares and hedge funds and listed companies and listed ETFs in combination with unit trusts, I think you might struggle to find one at a reasonable price with good service. You will be able to find one, but when you're looking for help on an admin side, I think you're going to struggle. So I would kind of encourage you to stick to the unit trust based ones first. Your alternative, as you've looked at, is obviously a place like Easy Equities, and they've got a range of investments. I haven't got experience. I haven't really personal experience of what their kind of RA offering is like. And definitely had no feedback from our listeners about good or bad. So I'm going to have to kind of plead neutral there and say I don't know. I think you must just check your fees, make sure that the costs are reasonable. There are some index tracker LISPs out there as well that only offer index tracking solutions, and then you've got a range of other LISPs that are built almost directly for the company itself. So you'll have a fund manager and they'll build a LISP, and then you can choose only their funds, and that might not suit your requirements, Adrian. But my view is I would focus on investment companies and then look at their underlying range of funds and see that you can get what you want. But just test the admin first. Pick up the phone to the call center. Check that when someone answers the phone, they know what they're talking about and they can give you some guidance and assistance. Most call centers can't give you any investment advice. They're not qualified or authorized to give investment advice. But what you want to find out is, ask them a process question, ask them an admin question, and just make sure that you're getting comfort from the call center, because that's what you're paying for. You're paying for the admin. So, Adrian, I'm sorry that you're not probably getting the answer that you're looking for, but I wouldn't focus on too much kind of exotic or specific stuff in my RA. I think if I were you, make your RA as low cost and as efficient as possible, and then use your other investments, use your discretionary money, your money that you can add to or withdraw at any time without worrying about Regulation 28 or retirement fund restrictions. Use that to buy your individual shares or your individual exchange traded funds if you want to buy more exotic stuff. So look at your investments as a portfolio, not as little boxes where your RA has to fulfill every function. Your RA is really there for the next 20 to 50 years. And that shouldn't be the thing that you're trying the exotic stuff. The exotic stuff should be elsewhere. And if you've listened to Honest Money long enough, you'll know that I'm not convinced that exotic stuff will work for your long-term good. I think the most boring stuff that's sort of generic equity portfolio, local and global, will probably be the best engine of growth over the next few decades. The other stuff is exciting and it gives you something to talk about, but probably might not make you as much money as you think. And having said all of that, don't forget that, you've also got your tax-free savings account that you can use, to complement your RA. So I think try and go for a blended approach if you want to do very specific things, but be pretty generic on your RA, and use the Reg 28 to help you. And for our listeners, Regulation 28 are the regulations that decide how much of your portfolio you can put into cash, bonds, property, and shares within your retirement funds. For most of us, we'll choose a balanced fund, and that will comply with Regulation 28, and we don't need to worry about much more, because Regulation 28 allows you to invest 45% of a fund offshore. And so your global and local exposure is taken care of. Balanced funds tend to have a very high allocation to the stock markets, and that's good for you. So I think for most of us, we don't need much more than one or maybe two balanced funds in a retirement fund. But if you like Adrian, and you like, you want to add some, kind of your own flavor to that, then maybe do that outside of your retirement funds, and let your retirement fund be the kind of the banker part of your portfolio, the thing that plods along and gives you consistent long-term growth. And in 10 years' time, when I'm much grayer than I am now, you can kind of check in with us again and tell us how it went. I hope that helps. Adrian, thanks so much for your question.
The Stradivarius violin is considered to be the most emotive instrument in the world. That's why you'll often hear it in investment ads, adding drama and the utmost importance to their philosophies, or for the announcement of a fancy new fund manager. 10x Investments don't need dramatic instruments to seem impressive. They let the results sing for themselves. So 10x your future without the drama. 10x is a licensed FSP.